How's it going? I'm Ryan. Today I'm going to go over the two trades that I took on NQ. It's been a couple days since I made one of these videos. Past couple trading days I haven't made a recap, and truthfully it's just because I haven't been trading well. Been making some money, but it's not good trading. It's over trading, oversizing, bad risk management, etc. So it's nothing that I really wanted to put out there. It's nothing that was done with any sort of clear intention or planning, more so just dumb trading. But I do have two Apex Challenge accounts. One's up 1800, the other's up 2K this week. So been swinging a little bit, trying to get these funded. Obviously, we'll tone that down a little bit. Today I traded as usual. Not trying to pass a challenge account, but just trading as I would on any account. So I'm making a review today because it broke the cycle in terms of bad trading and actually trading according to how I should. And it worked out. Small profit on the day. I guess it's probably going to be reset. Not quite. 224 on the day across both accounts, and that's off of one loss and one win. I guess I can show those here. So let's get into it. Let's take a look at what I was watching. Coming into the day, yesterday we had a massive sell-off. We're looking at the 1 hour time frame here on NQ. We had that weekly gap open, and we hadn't quite filled it yet. So my first kind of idea was a fill of that gap, which did happen. And then from there, kind of looking to see if we continued looking weak or if we filled that gap and made a move up. We did fill that gap, we made a move up, and then we came right back down. So let's take a look at the price action today. I had a few zones marked that were relevant, so I'll go over the three that came into play today. And those are basically this like 215, we'll call it, to 168. We have 92 to like 60. 983 or so. I guess I can just pull it like 980 to 935. And how did I get those? Those are all derived from the volume profile here on the 5-minute chart. I chart each daily and overnight session with the volume profile. I find high volume nodes, most recent price action being most relevant, and I use that to kind of find areas of support and resistance slash supply and demand slash liquidity. Just get an idea of where we would see price want to gravitate towards, and watch price action in those areas for an idea of where it might head next. So first of all, what I did is I looked at the most recent trading day. I looked at yesterday's price action. I looked at the volume profile, and I marked a couple. This one didn't come into play, but this is definitely a zone that I would be watching if we continue to make our way up for potential rejections in this like 280 to 320 zone. Pretty wide, but something to watch. And that's just, once again, high volume node. So this top zone that we had, high volume node here, if we extend that back, we can kind of see the price action that's related to, right? We come down, we form a little consolidation, and we continue this breakdown. In doing so, we know that there's some orders there. There was quite a bit of transactions happening here. Those transactions led to a decline in price. So as price came up and tested that zone, we see those selling orders kind of pick up, resistance hit, and then we move back down into this next zone. So this next zone was derived off of a few things. It was looking at the overnight session, as well as yesterday's session, as well as the last time we were down in this price range. So I want to kind of align a lot of stuff. So this is looking at this consolidation before we made this big move up, and then yesterday's not quite lows, but similar, close to those lows, and then the point of control in this high volume node from the overnight session. So that's what this zone is derived from. And then this bottom zone I had to go back in price to find, but this was, if I can extend this, it was this little price, or excuse me, this little volume node right here. I'm not sure why it's not extending, but I was looking at the volume associated with the price action right before we gapped up, right? And so that's what that high volume node is looking at this little volume node right here, from the most recent day that we were in this area. So that's where that is taken into place. And then this is looking kind of at this price volume node there. So take a look at, I'm gonna zoom in on the 5 minute and we can take a look at the trades I took. That's just giving an overview of kind of the volume nodes that I was watching for price to be drawn to. Likewise, we had this gap fill right here. So right at like 980 was that gap fill from the weekly open. So off the open, I said that I wanted to see that gap fill. We did. We pressed up into this zone. We rejected off that like 270, 20,070, right, almost exactly. And then rejected down, filled that gap, made our way lower, tested the bottom half of this zone. So normally, basically what I'm looking for, my system, is I'm watching price enter one of these liquidity zones. If I'm going long, I want to look for longs in the lower half of this with a stop loss below either the low on price action or the low of the zone, whichever is more relevant. And I'll go into that in a second. And what I want to see is 5 minute candles confirming that we're holding that area, as well as like 1 minute. That can be also an additional confirmation. And then I want to target the next liquidity zone, or just you know, a volume node, maybe not the next major liquidity zone, but just a volume node that makes sense. So that will go into this trade and why I took profits right here. So I was actually looking at a potential long here, but I didn't, based off of how brutally red yesterday was. I tried to catch a bounce yesterday and learned my lesson very quickly. So I think I was a little hesitant to long down here. But however, after we filled that gap, we held this zone. It was a good opportunity, and the 1 minute showed it pretty well. If I pull up the 1 minute. I did not take this trade. In fact, I took the exact opposite. I tried to short at the top of this zone, so we'll go over that. But if I zoom in here, this gives a good opportunity, right? A great risk to reward. So we come down, we start forming hammers. We see that we're holding, the selling aggression is starting to wear out and starting to round off down here. And we see high volume pick up on these hammers that are testing lower and failing to close lower. So this could have been a good entry long with a stop below this zone and targeting, you know, probably this most recent high or something like that. This first trade was easily avoidable, and I want to show a few reasons why it was a terrible trade and why I shouldn't have taken it. I was trying to predict price action instead of react to it, and whenever I do that, it usually ends up bad. So as price came down into this area, another thing that would be, you know, worth considering for a long position here is we see those points of control for those 5 minute candles really start to shift towards the bottom of the candle, right? And when volume can't close lower, when price can't close lower than where the majority of the volume is, that tells me that there's buying pressure, right? And we expect this area to act as support. So we expect it to act as support. Price is testing it, can't close lower. Those pointed controls are shifting lower. Everything's indicating a bounce. I took a short. I just placed a limit order. I placed a limit order here. I placed a stop below the most recent high, and I placed a take profit below low a day. So I was risking 30 points or so, 31, it looks like 31 points, or it was about 50. I think my take profit was right at 930, and my entry was at 980. So I was willing to risk 31 points to make 50 points of profit. It was a bad idea though, because we didn't close bearish at all. We didn't show any signs of rejection on the 5 minute. In fact, we closed at the very top of that candle bullish. The point of control, everything here looking nice and bullish for a bounce. And you know, not until like here was there any sign of a rejection. So I didn't have any sign on the 1 minute either. So this trade was bad. I was trying to predict price instead of react. That was a bad trade. I was patient though, waited till we made our way all the way up into this next liquidity zone. Waited until we had some sort of visual confirmation that price was weak. So let me pull this up. And what was I looking at? I was looking at price coming up. I was looking at this momentum dying off, right? We have very bullish candles making our way up. Then those candles get smaller, upper wicks on the 5 minute. And then we see these points of control. Like, right, this one's really low in that 5 minute candle. If we look, it was like in here. That's a nice bullish point of control. Similarly, this one, right? It's kind of more in the middle. But we closed higher. We closed higher. We closed higher. That shows buying control, buying pressure, excuse me. This next candle, however, we tried to push higher and we rejected pretty much right off the top of this zone. And that's what we'd expect, right? We want to enter, if I'm entering long, I want to enter in the bottom of the zone. If I'm entering short, I want to enter in the top of the zone and set my stop above it or most recent price action. So once we got a 5 minute close, we look at the point of control starting to shift higher. The fact that price can't close above that, naturally we expect this to be an area of resistance. We saw the reaction that we got in the morning when we had a big sell-off after testing this area, and I entered short. Now, when placing a stop loss, what I would typically do is either place it above the zone or above most recent price action that makes sense, right? So we have this rejection right here. So a reasonable stop loss would to be place it above that. Enter here, place stop loss above here. I took a little bit more risk and I placed my stop loss above this high volume node here because I figured if we are pressing up into this area, there's potential that we seek out this liquidity here. Probably not the best idea. I think most recent high here would have been the most likely play to invalidate the trade and reduce my risk. So I took a little bit more risk on this trade. It did work out, and so my stop loss was up here around like 120 or so. My entry was right around 87, I believe, 87, 75, 88, and my take profit was right here at 33. Now my take profit was there because of two things. It was because it had this most recent swing low right here as a target. Additionally, we had this little volume node. If I highlight that, we have this little volume node right here. And I figured that we kind of have this drop in liquidity here. After we get out of this zone, most likely we want to come down and test this liquidity here. So I placed my take profit right at the top of that zone, and it happened to work out pretty well. So I took a 31-point loss early in the morning. Stupid trade, shouldn't have taken that. All signs were telling me that we were going to get a bounce, and waited for a setup. Things kind of shifted. Likewise, on the candle that I entered, right, we see a nice like shooting star, hanging star, whatever it's called, hanging man, I don't even know, but a nice rejection candle. And then we see that point of control right at the top of that zone, showing that we tried to break out, couldn't. There's sellers pushing it down. So everything was looking pretty solid on that trade. That was a much better trade. I didn't mean to move that. That was a much better trade in terms of applying my actual criteria for looking for a trade. I could have reduced my risk by setting stop loss here, having about like a 20-point stop for what was a 54 point take profit. That's plenty, you know, that's like a 2.5 to 1. We love that. So the risk to reward is positive in these situations, and it showed off today. I didn't size up. That has been a problem this week, is I would size into trades, I would average into trades, and that's not always working for me. Sometimes it works, sometimes it doesn't. What I would like to do is keep consistent size and keep consistent trading patterns and consistent risk management, consistent R to R. You know, it's not always going to be the exact same, but if I can keep it around 2 to 1, I feel very comfortable there. So that was my second trade, and I'm proud of myself for not sizing up. I'm proud of myself for not over trading. I took a losing trade. I accepted the loss. I waited for another setup. I took it, and it worked, right? And that's a good confidence builder to move forward and just trade as I should, as opposed to with the urgency and just like lack of clarity that I've had this past week. I think I just want this to work, right? Of course we all do. And I think I've been letting that desire to have things work quickly has actually set me back more than if I just took my time, and that's a valuable lesson to learn in trading. But nonetheless, let's just take a look at the price action for the rest of the day. I'm fascinated with how these liquidity zones work. Obviously, I need to continue to trade and learn and get better, but it's been pretty wild to watch. So as we came up, we hold the bottom of this zone. So I almost timed the low on that. Probably should have been looking for longs in here and opposed to a short, but it worked regardless. But longs in the bottom of the zone after we hold it, pretty nice. We moved right up to this next zone, and just the accuracy that we have, right? We touch it by it's within a point, and then we get a temporary rejection, move right back up into it before we kind of drop out, retest that zone again, pull back into this zone, kind of hold the bottom of it for a temporary bounce, break it, reject the bottom, kind of come back into it, hold it, right, move higher, try to hold it, not quite, move higher, try to hold it, break down. Where do we go? Right into this zone. So I think there's something to be said for these volume nodes and using this as a way to determine where liquidity lies in the most recent, in conjunction with price action, and just to get an idea of where price might want to go. But still have much to learn. I think the majority of what I have to learn is in my habits, my discipline, my management of trades and risk. And I can read price action pretty well. I can highlight high volume nodes, and if I'm patient, I can watch price action as we approach these areas and take decent R to R trades, and I can make money over time, right? Like today shows it. We took a loss, we took a win, we're up over $200. Sizing was the exact same on both trades. So that first trade wasn't even within my plan, right? It would require some sort of 5-minute close indicating my idea. We didn't get that. So the trade that I took not according to plan was a loss. The trade that I did take according to plan was a nice 55-point win with 5 contracts. That's $550 on a single trade. No runners, nothing, just bulk. So it's a work in progress. I think that this is helped with my confidence, and just that if I just trade how I should over time, the account will grow. But it's a hard thing being patient when you want something. So we'll try our best, and that's just a quick update. Like I said, I hadn't made a video in a while. It was because I wasn't really proud of what I was doing. If you're super interested, you can go watch the live streams because I live streamed it all, but there's nothing really to be gained in it. It was pretty irrational trading. The reason why I'm making this video is because I actually, for the most part, stuck to my plan. Like I said, that first trade was completely avoidable, but it's a lesson learned. That's all I got for you. I appreciate you watching. Thank you very much. I trade live Monday through Friday, so if you want to stop by the stream, please do. We'd love to have you. And with that, I hope you have a great day. Thank you. Peace.